Wall Street investors are selling homes across the U.S. housing market at significant discounts, sometimes up to 20% below market value. This trend is raising eyebrows and prompting questions about the state of the housing market. Invitation Homes, America's largest landlord, owns over 85,000 homes across the country. They're now selling properties in areas like McDonough, Georgia, at prices well below market value. For example, a 4-bedroom, 3-bathroom house is listed for just $245,000, which translates to only $19 per square foot. This represents an 18% discount compared to the local market value. These corporate landlords are not just selling, they've also stopped buying. This behavior is eerily reminiscent of what we saw in 2006 and 2007, right before the last housing crash. In some areas, like McDonough, Georgia, the supply of homes for sale has skyrocketed. There are now 340 homes for sale in the zip code, a 300% increase from pandemic levels and the highest in 8 years. Similar trends are being observed across states like Georgia, Tennessee, North Carolina, South Carolina, Texas, and Florida. It appears that these investors are anticipating a market downturn and are trying to exit before it fully materializes. However, it's important to put this into perspective. Wall Street investors only own about 1 to 2% of homes in the U.S. housing market. Companies like Invitation Homes, Progress Residential, First Key Homes, and American Homes for Rent collectively own about 500,000 to 600,000 houses. While their selling won't cause a national housing crash, it could significantly impact certain neighborhoods and cities where their ownership is concentrated. The Atlanta metro area is one such location where these investors have a substantial presence. Many of them bought homes cheaply in 2021 and 2022, often properties that were in foreclosure at the end of the last crash. Now, as they see the market peaking and prices starting to drop, they're selling. For potential homebuyers, this situation presents both opportunities and risks. On one hand, there are chances to buy homes at discounted prices. On the other hand, it's crucial to consider why these savvy investors are selling and what it might mean for future home values in the area. In some parts of Atlanta, prices have already started to drop. Data shows that in certain zip codes, prices are down 1.4% over the last year and 0.4% over the last month. With investors selling and inventory rising, this trend may continue. The rental market in Atlanta is also experiencing a downturn. Rent prices have dropped significantly over the past 2.5 years, with many apartment buildings offering substantial concessions to attract tenants. Despite these short-term challenges, Atlanta's long-term prospects remain positive. The city boasts a strong economy with numerous Fortune 500 companies, good job growth, and relatively high median incomes. After this correction, Atlanta could present good buying opportunities for long-term investors. In conclusion, while Wall Street investors selling homes at discounts is a concerning trend, it's not necessarily indicative of a nationwide housing crash. However, it does signal potential challenges in certain markets, particularly in areas where these investors have a significant presence. Potential homebuyers should carefully consider local market conditions, future price trends, and their long-term plans before making a purchase decision.